Hi, and welcome to the first of what we hope will be a daily series of podcasts covering major market events in the Northern Hemisphere economies from Westpac London's office. Well, today, after treading water for most of the session, we've seen some pretty decent gain on equity markets related to some news out of the US economy. Of course, earlier this week, equity markets were performing very strongly because of optimism engendered by the passing of austerity measures by the Greek government, which to the market's mind at least, has reduced the chance of a near-term default by the Greek government. Markets were treading water today, but then rose sharply on the release of the news that the June factory ISM out of the US posted a bit of a bounce against expectations of a further decline. That survey is still certainly weaker than it was in the first 4 months of the year, and it still suggests that the US economy has clearly slowed, but it now looks like it's maybe not in free fall, which had been an emerging concern for some analysts. Other data on the US economy wasn't so flash. We saw the 6th consecutive fall in construction spending in May, and also consumer sentiment was revised down in the latest June survey as well. But the focus was very much on that factory survey. That better than expected result is the reason why, as I speak, the Dow's up around 1%, and the average gain across the major continental European markets is also around 1% today. In other news, for example, on commodity markets, we've seen some mixed results. Food commodities are higher, other commodities are down. Gold's down 1%, for example. I think that's a reflection of the increase in risk appetite that's come through in the last few days, whereas previously investors have been buying gold as a hedge against the uncertainty in the global economy. They've been selling it in the last day or so, following the news out of Greece and the better news on the US economy today. The oil price is down around 1% today at $94.50 a barrel, another sign of the mixed story on the commodity front. It's certainly been an equity positive day today, not so positive on all of the commodity markets. A couple of other things worth mentioning. The Aussie dollar, which was at 1.04 against the US dollar at the start of the week, is now trading comfortably above 1.07 against the US. That's a reflection of the increase in risk appetite we've seen this week, following on from the passing of that Greek legislation and also the decent news on the US economy today. As another reflection of that diminished risk aversion or increased risk appetite, we've seen US bond yields over the last week at the 10-year part of the curve rise from 2.85% last Friday to around 3.2% at the moment. Increasing bond yields are a sign that markets are perhaps more confident about the outlook for the global economy. Although you could also argue that the end of the Fed's quantitative easing program yesterday could perhaps partly explain the pickup in yields as well. There are a couple of things to watch for. Next week, we've got central bank meetings in Australia. The Bank of England also meets, and the European Central Bank too. Although I think the ECB will be the only one to actually lift interest rates. Although our view at Westpac is that that could be a policy mistake. On Friday next week, it's the release of the monthly jobs report out of the US. After some strong gains earlier this year, the May report was somewhat weaker, and we were looking for a similarly soft result. A gain in employment, but only a modest one, to be reported for June. The other thing I'll just mention quickly is we're still worried about Europe. It's going to blow up at some point later this year. But that's a story for another day. I look forward to speaking to you again on Monday.